Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about HLE Glasscoat, a very interesting share which is in a next niche segment and has been doing well as a stock over the last 6 months. So let's understand what has gone on with the stock and whether you should invest or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about the company, HLE Glasscoat was established in 1991 and they primarily manufacture carbon steel glass lined equipments. So basically these equipments are glass lining products that are used in pharmaceutical testing or in labs etc. majorly. They were formerly known as Swiss Glasscoat Limited, so you'll understand that Swiss Glasscoat has been listed in the Indian market for more than a decade, and the stock has performed appreciably over the last 6 months, on which I'll discuss later on in this presentation. So HLE Glasscoat caters to major pharmaceutical companies, dye and agrochem companies, as well as food processing firms across India. So they are not just making glass coat equipments for pharmaceuticals, but they are catering to major industries across the board. And that's why I like the company, because you are not dependent on one industry doing well. So if pharma industry is not doing well, it is not that the company will not do well. They have businesses with other sectors as well. They have manufacturing units around the nation, and currently the market cap of the company is around 1000 crores. So it is a very low cap, micro cap company. It is a very small company in that regard when you consider about the market cap. If we look at the financials of the company, then this is what is extremely impressive. The sales has grown by around 48% to around 40 and a half crores compared to 27 and a half crores. Whereas the profit has jumped from around 1.4 crores to 3.1 crores. That is a massive jump, and that is a jump of nearly 115 120%. The debt is low. It is not that they are debt free, but the debt is extremely low, around 15 crores or so is the debt. The return on equity is 11.2%, whereas the operating profit margin is at 11%. And this is the cause of concern that major investors are not buying this company. Even those who buy into mid and small cap and micro cap companies are not getting into Swiss Glasscoat because the return ratios are extremely low. But in terms of profitability and sales, it is doing extremely well. So the performance of the stock, or how the stock has performed over the last year, couple of years, stock is up around 4 times in the last 6 months. So it was dwindling around the 120 to 160 levels for the last 2 3 years and did not do much. And if you look at the EPS of the company is around 8 rupees or so, 7 to 8 rupees, and on a standalone basis, so 7.5 rupees is the EPS at 120 rupees. It wasn't quoting that expensive, in fact only 15 16 times earnings. But then the stock has absolutely blasted from around 160 170 levels all the way. It has gone to 720 730 levels. It has become 4x in no time, and probably this is because a lot of marquee investors or some top investor has got into the company for sure, and will know about it over the next 6 months. So not that we have received any official announcement or document from BSE or NSE, but it seems like the way the buying has come in and the way the stock has moved from 160 170 all the way to 720 730 now in circuits etc. in just 6 months, it seems like large investors have got into the company. We'll come to know about it later on. Currently trading at 90 times earnings, which is for me extremely expensive. I would say that if it would have traded at around 35 40 or even 50 times earnings, that would have been reasonable. But at 90 times earning, for sure there will be a correction in the stock. So technicals I'm going to talk about later on in this presentation, but at 90 92 times earnings, it is expensive and may have run up already. The stock may have run up already, and if you buy now, you could be trapped into the stock. But I believe that it is a buy on decline. And why I believe that is, first of all, it is a very unique business and it is in a niche space catering to major industries. So it is not that it is only catering to pharmaceutical industry, and pharma is not doing well with a lot of FDAs, etc. for Indian companies, and so the pharma cycle is over, the pharma bull run is over, so the stock will not do well. They are into dyes, pigments, chemicals, packaging, as well as glass coatings for pharmaceuticals. So they are into different segments, and once one of those segments really does well, or one of those industries really does well, Swiss glass coat will do even better. So can be a good ancillary play for pharma and chemicals for sure. So if you don't want to buy into different chemical companies, they have run up a lot. If you don't want to get into pharma companies because you are in fear of US FDA clampdown, you buy into this company because they are catering to different pharma, chemicals, dyes companies. Low debt and small base will definitely help. So low debt will help when sales really grow, profitability will grow even further. And with respect to small base, what I'm trying to say is that having a 3 crore net profit could easily become a 30 crore net profit over the next 4 5 years. So the profit could jump 10x in the next 4 5 years, you never know. And in that regard, the stock could go up 15 20x, but that is only conjecture, and you do your own due diligence. But this is what it seems like. In small cap companies, it's just a market cap of 1000 crore. You could easily have a market cap of 20 30,000 crore if the business really runs well over the next 5 to 7 years. And one has to remember that small caps will be in fashion for the next 2 3 years. I'm very certain about it, that after the bloodbath of the last couple of years and major retail investors getting out of small cap stocks and getting into large cap stocks, clearly suggest that large caps will not run. Retail players only get into those stocks at the end of a rally, and that is what I'm trying to tell everyone here on this channel, is that you better be first, or at least in the first 10 or 20 people of buying into a stock. Don't be the first, but after it has run up 20 30%, you know about the fundamentals, go ahead and buy and don't be afraid. But if you buy something like a Bajaj Finance, Bata, Titan, etc. now, after the run up that it has seen over the last 2.5 3 years, it would not be a wise idea. So small caps will run for the next couple of years, that is for sure. Packaging and coating products will increase in demand going forward. So this is why it is a buy on decline. I'm not looking at pharmaceutical. I'm not looking at something like dyes, pigments even. But if you look at the major you can say the consumer brands across India, even those are the you can say clients of HLE Glasscoat, and the HLE Glasscoat supplies their products to these companies as well, and they will come back into fashion once the economy recovers. And I don't see Indian economy dwindling at 4% all the time. There will be recovery over the next couple of years, and you'll see the changes and things happening for small niche players as well. If you look at the technicals, it is extremely overly bought stock. So it has run up from around 170 rupees all the way to 720 30 rupees. And that is why I'm saying that you need to be very careful while you buy into the stock. The major supports lies around 500 rupee level, which is at least 220 rupees below the current market price. So one has to understand that we could see an easily 30 to 40% decline in the stock. Maybe now, maybe in the next couple of months, but we will see that for sure. So as I explained, it is extremely overly bought, and the major support is around 500 rupee level. So a good 30 40% decline could come into the stock. So you may see the stock dwindle down to 450 odd levels. So wait for such kind of a decline. Even if it goes to 1000, you wait for a decline of around 35 40% and get into the stock immediately. Corrections will be extremely good opportunities to buy, so don't be scared, and don't buy at the top. Don't buy at 90 95 times earnings, which it is currently quoting at. So wait for levels at least close to 520, 530 levels, or then you start adding, in any declines you add even more, or any up move you add little bit. And over the next 15 months you'll have a very good quantity of the stock, and you'll see the magic happening once the numbers turn even more positive. Once these sectors keep on rolling, the businesses can be a multi-bagger from here, cannot be, I don't know, but we could see a major up move if things really fall in place for the company, because they are into different businesses. One has to take that into consideration. This is what I like about the stock, that they are catering to different sectors, different businesses, and into a space which is more consumer oriented rather than infrastructure oriented. So what needs to be done? I believe you can buy on major declines, keep track of numbers, and have a 7-year view. So if the numbers really turn bad, then you need to get out of the stock, and that is why I want you to buy on declines rather than buying at 700, 800, or 1000 rupee level. Surely it can become a multi-bagger, but you have to be very careful at what levels you buy and at what point of time you buy. Don't buy when the results are extremely bad and the stock starts falling. Then you wait for the results to improve. If the results are really good and because of valuations the stock is falling, then you buy into the stock. Have only 5% or less than 5% portfolio into such small and micro cap companies. So this was my video on Swiss Glasscoat. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. It would be a great help for me to continue with the channel on YouTube. And thanks a lot for being a patron, those who have already been. Thank you.